Welcome, everybody. We're so excited for this Atto Masterclass today. My name is Lana Weal, and I'll be doing a mini intro to the session and to Atto before I pass over to Kevin to talk about an intro to DAOs. And firstly, I would like to acknowledge the traditional owners of the land on which we meet. Apologies, I'm a bit confused because I'm actually not in Australia at the moment, but I would still like to do this acknowledgement of country, as I know a lot of our attendees are in Australia. Kevin is on the land of the Gadigal people, and Kate, Atto's founder, is on the land of the Wurundjeri people, and we would like to acknowledge their others past, present, and emerging. So if you don't know what Atto is, I'll just talk about Atto for a little moment. Atto is a global startup school and a micro fund. So we focus on empowering female founders to build scalable, sustainable, and independent startups. So it was created in 2019, and we're all about hands-on education. We're all about taking focused clarity action. So we want founders to take these small actions consistently to build a business that they want on their terms. And we have multiple programs. We're actually open for applications for the accelerator program right now. So if you want to check that out, you can go to atto.bc to learn more. We have a monthly membership, that's the Academy, and we also have a microfund coming out as well soon. So if you do want to hear anything about that, please check us out on our website to hear more. So we would love to hear who's here today as well. So can you please post in the chat, how familiar are you with Web3, NFTs, or the crypto landscape? Are you a newbie? This is definitely me. Sure, I might have invested in some cryptos, but do I understand a lot of the things? No. And it is an emerging space. So if you are somewhat comfortable with all of that, feel free to share. But if you are an expert, if you love it, if you work in this full time, definitely let us know, because we want to know who's on the call so we can tailor the information for you as well. We will have time at the end of the session for Q&A as well. So if you do have questions, feel free to post them in the chat, ideally with a Q at the beginning or question at the beginning, so we can filter those a bit more. But yes, we would like to know who's here. Are you a newbie? Do you know a little bit? Or are you an expert? So feel free to post that in the chat, and then we will check that out and make sure we try and tailor it for you as well a little bit more. And then if you're brave enough as well, if you are a startup founder, please let us know what you're working on. Share your website, share your LinkedIn, tell us what you're working on and what you need right now as well, so we can see who is on the call, who could support you as well, or how Atto can support you. So I'm just going to do a mini intro to Kevin as well. We're super grateful that he's here today to share his expertise. And I want to say his kind of passionate, nerdy side with us about DAOs, which is going to be very interesting for us, no doubt about it. We're going to learn a lot from this guy. So I'll just share a little bit about his bio, and then I'll pass over to Kevin to handle the presentation. So Kevin is the investment manager at AirTree, which is one of Australia's largest venture capital funds, and they have over 85 startups in their portfolio as well. And they're one of the first institutional funds in Australia to invest in Web3 and crypto projects in Australia, which is very exciting. So they are on the cutting edge of this industry and this topic as well. And Kevin is clearly passionate about this topic. He supports some Web3 and Web2 startups in his role. And prior to joining AirTree, he was at another investment firm, Reinventure, which was FinTech specific as well. So he's definitely been in this space for a long time. He's definitely passionate about what he does. And we're so grateful that he's here today to share his passion with us and to let us know what DAOs are, how startup founders should use them, and what we need to know as well. So like always, I'm going to classically stop my share screen, and then Kevin can take over. And as always, if you have any questions, please post them in the chat and we will try and help you out. And without further ado, Kevin, take it away.
Thank you for that generous intro, Lana, and thank you to Kate and Lana, the Atto team, for putting this together. So good to see so many faces here. Let me just share my screen and we'll jump right in. Can everyone see my screen? Awesome. Cool. So, DAOs. It has been the buzzword of the last 6 months. I'm going to give you guys a bit of a breakdown of what kind of we're seeing from the venture landscape, and hopefully some tips on kind of if you are interested in using the DAO model for your own startup or interested in joining a DAO, kind of what maybe to expect from DAOs. But before I dive right in, I'd like to just preface with two things. First, despite how cool this concept is and how much it can unlock, it's not going to solve all the world's problems. There are many instances where DAO models shouldn't be applied. And two, I'd be remiss and I'd be in big trouble from my compliance officer if I didn't say none of this is financial advice or investment advice. All views are personal. So with that out of the way, I'm just going to just run through the structure that we'll go through today. We'll just start off with what they are, what DAOs do, what the current state of DAOs is, and then move on to why they've kind of come to be, take a little history lesson, and then follow on with some considerations for practical applications if you're thinking about starting your own DAO, joining DAOs, and then challenges that are currently faced. And then finish off with some things to keep in mind and resources to use going forward if you guys are more interested. Okay, let's jump in. So the basics. So what are DAOs? I'm not going to confuse you guys or bore you with the technical definition of some trustless system with tokens flying around the universe. They are simply a new model of collaboration. Which stands in contrast to the traditional corporation model that there is right now, which is most of the world's companies. DAOs kind of allow for greater bottoms-up governance at a community level and more equitable outcomes. It has still very similar aspects to traditional corporations in the sense that most DAOs offer services or products and have shared missions and values, but the way that DAOs organize themselves is quite different. And the goals that can be achieved can extend beyond what a typical product or service type company can achieve. And we'll have some examples later down the line. But just to kind of paint the picture of where DAOs are at today. The first DAO ever, MakerDAO, was kind of started in 2014, didn't really take off until 2017. But there are over 2.2K DAOs now with $1 million in their treasury. And DAOs have accumulated over 12.4 billion in their treasury in aggregate, and 3.4 million votes have been made across all the DAOs. You can kind of get deeper into this data if you go into deepdao.com. And I guess this is incredible. Translation is basically more than 6,500 folks online have mobilized and self-coordinated themselves to generate 12.4 billion in their treasury and actually create products that people use and services that people use. But let's actually break down what DAOs are. What are the atomic elements of DAOs? In my mind, there's many kind of shapes and ways you can kind of break down DAOs into, but in my mind, there are 3 elements. You can break them down into them being open, them having shared ownership, and them having a shared purpose. Them being open is kind of in stark, not in stark, but in contrast to most corporations where there is kind of obfuscation based on hierarchy. DAOs tend to be open in terms of access to the DAO and transparency to what the DAO is doing and how the tokens are being moved, the actions that are being taken, the votes that are being passed through. The shared ownership piece is probably the most important piece here. And it's really only enabled through blockchain technology. And it allows for everyone to more or less feel empowered through having tokens that represent a piece of the DAO. And it kind of all plays into this notion of why decentralization matters, why turning users into owners matter, and what that can do for your project if you want to go down this DAO path. And then the last piece, having a shared purpose, is more or less something that all kind of corporations, organizations have. But as I alluded to before, where most traditional corporations have a binary categorization of either offering a product or a service, DAOs can offer more and do more. And I'll kind of get into examples later. Let's jump into, but why? Why DAOs? Why has this kind of emerged? What's wrong with the current corporation model and why decentralize? I think with the current corporation model, there's this issue of the agency problem, where there's a misalignment arising from the separation between control and ownership. And you have this hierarchy where decision-making isn't transparent and it takes a lot of time to pass decisions through. And there's single points of failure and there's massive income gaps from top to bottom. And the pools of talent usually kind of localized. DAOs can solve for a lot of these issues. Some history. there's been a drastic decrease in union membership since the 70s. And this is in part due to kind of employer resistance, but also in part due to less government support. But in tandem, if we look at productivity growth versus worker pay, it's completely diverged. Productivity growth has grown 62% since the 80s, whereas hourly compensation has only grown 17.5%. In other words, most of productivity gains actually goes to capital, to investors and those who dictate salaries, while workers don't really get that upside share of the economic growth that they're providing. Additionally, there's a good proportion of true economic value add that comes from bottom up, that's been stripped from employees or contributors or users to subsidize potentially inefficient parts of corporations. Now, why decentralize? There's probably two levels where we can talk about this. There's a state level where we kind of want to avoid big red digital authoritarianism. And then there's the corporate level where we want to avoid big tech oligopolies. And the top 5 companies in the world by market cap right now are internet companies. And this was not the case 20 years ago, even 10 years ago. They started out quite friendly to their users, but have become much more extractive and less cooperative. And you can see this. You can see this in the Ubers of the world and the Uber Eats of the world that take roughly 20 to 25% of the true economic value add of Uber drivers and restaurants. You can see this in the Apple Store, taking 30% revenue cut for any dollar that you make on the App Store. You can see this on YouTube, where content creators have 45% of their true economic value stripped from them that goes back to YouTube. And you can see this on Spotify, where 70%, up to 70% is taken away from artists. And arguably you can see 100% take rate from Instagram, Facebook, and TikTok. So as these big internet corporations and Web2 aggregated power through the supply side and demand side network effects, they created this pricing power that now they kind of just wield with impunity. And most of crypto is really just a response to this and that thing that I mentioned at the state level. So why would you start a DAO as a founder? I think there's probably really 2 main reasons. One is you can more easily attract a global talent pool without potentially all the fuss of all the legal paperwork and admin that was required to kind of bring people from overseas to work. Though I feel like that infrastructure is being built out right now at a Web2 level. And then second is ownership incentivizes greater contribution. And when you marry these 2 things, when you can get the best talent globally and you can give them more ownership to incentivize greater contribution, you can do much more as an organization. Let me give an example of like a thing that would work maybe well as a DAO format. Take a e-commerce clothing play where maybe you want to be the next Mr. Porter, but for Asian clothing and really represent up and coming Asian brands coming to bear. You can create a DAO, raise funding from either community, retail, or investors, have them have part ownership of this DAO vehicle. And then through this DAO treasury, you can incentivize, well, firstly, you can build out the operations that is required to actually run, say, an e-commerce platform. And then secondly, you can incentivize marketing, distribution, tactical things down to like TikTok ads and Instagram ads and Twitter partnerships. You can incentivize all of that with tokens, with this part ownership of that business. I want to caveat and say that this is just one example. Like there are many models where DAOs won't work, and they tend to be where you have a a vertical space which requires deep domain expertise and potentially a lot of capital from sophisticated investors who understand the risk of whatever they're investing in to do. I think DAOs may not work as well in those type of models, but I think for brands, for product plays or commerce plays, e-commerce plays, DAOs could be a great model to kind of build a community up front, raise funding, and then because you already kind of have a community to help that are loyal to help with, and that also feel like a sense of ownership, that kind of is far better than starting as a corporation, you're just raising funding first through larger investors, and then trying to build a community afterwards. So here's kind of like a breakdown of the trade-offs, just rough trade-offs. There are probably many more, but these are the key ones here. As I mentioned, DAOs, you can have global talent pool, they're dynamic, but it can be potentially hard to scale because voting wise, you need to be really kind of clear and structured in terms of how you do your voting, or it can be just too much for the community to constantly try to vote on proposals. And there needs to be probably things to, there are mechanisms in place that actually help with incentivizing long-term alignment, but because tokens are from day one liquid and anyone publicly could potentially buy them, it means that you need some type of vesting schedule on these tokens to incentivize like talent retention over time. Traditional corporations are better probably when it comes to scaling and iterating, with a smaller, more potentially expert pod of professionals doing whatever they need to do, kind of without the noise of the rest of the community. But again, as I mentioned before, they're prone to a whole bunch of other flaws and centralization. So practical applications. If you are thinking about doing a DAO, kind of here are 8 things that probably would be good to keep in mind. I think first and foremost, the DAO model really should be subservient to your vision and mission to provide product, service, or whatever it is. It shouldn't be the reason you're doing a startup. It should only be potentially a different structure that may be more conducive to what you really want to achieve. Second, to understand, it's really important to understand where DAO structure may or may not be the most appropriate for your community, and whether you may want to gate the community and keep it kind of exclusive. There are cases where this is not conducive for DAOs. 3, token release schedules, I touched on before in that previous slide. This is more or less to kind of incentivize long-term alignment with talented investors so that token value is unlocked in synchronicity with potentially milestones that are hit by contribution of users, or you just wanting maybe to prevent investors dumping all your tokens up front. I think standard practice here is to have for investors a token vesting schedule of 12 months where their tokens are uniformly released over a 52-week program, where each week they get an equal amount of their tokens kind of vested, so that they can actually trade those tokens. With governance and voting, there are various different voting models. I think it's fair to say uniform voting probably doesn't work for all DAOs. It gets a bit too noisy, and it's not the most informed people that are kind of given more votes. So that's a tough one. But there are other models that are arising that are more interesting, where maybe it's a 1 vote per wallet based on the skill set that they have, or 1 vote per token that is held, maybe even requiring a proof of participation model where you kind of allocate voting power based on contribution, whether it's through a code base or through partnerships brought in or through marketing impressions that they've kind of delivered. Next, token utility. I think token utility is important for both attracting new talent into the DAO, but also for actually monetizing the DAO. If the DAO wants to be a sustainable model going forward, it may need a source of income, and token utility is often something that gates access to the service or product that the DAO is providing, whether that's, say, marketing services or a decentralized exchange that may be giving you better fees. These tokens allow for maybe the public to buy these tokens off the public market, create buying pressure, increase the price of the token while also accessing your service. So there's a correlation between the value that you're providing and the token value, if that makes sense. These remaining 3 points here, the tech stack, dispute management process, and proposal implementation procedures, will take a long time to get into, but I'm happy to share resources for these after the session. So I'm going to skip ahead and kind of talk to the different types of DAOs that we have out there, and which DAOs may be more or less investable from institutional grade investors or not, and kind of just to paint the picture of what different types there are. So as I mentioned before, there are product and service oriented DAOs. Uniswap, I have a case study on Uniswap later, but product DAOs are, as the name suggests, DAOs that bring together folks to build a product that's offered to the public. Some that are the larger ones out there are mainly DeFi, crypto related projects. The largest one here is Uniswap, which we'll talk about later, but it's a $6.6 billion DAO with 3.5 billion in its treasury. So really massive, and it has a massive community behind it. Services DAOs are almost replacing agency models, replacing marketing agencies, replacing law firms, investment banks. These are groups of folks that share the same skill set coming together to better service clients and be better rewarded for their contribution. And what I mean by that is, with, say, traditional law firms or investment banks, parts of the economic value generated for the firm delivered by you is kind of allocated to subsidize maybe other parts of the corporation. Whereas in service DAOs, because there aren't as many overheads, more goes back into the pockets of those who actually contribute. And so they're really interesting services DAOs coming up. Spearbit DAO is one that I'm personally fascinated by. They're a bunch of amazing cybersecurity experts. Lex DAO is doing a DAO for legal engineering, which sounds a bit shady, but trust me, I don't think it is. And there's more that's coming out that are doing everything from design work to developer work to deep AI work. But I'd have to say these first two DAOs, they're probably rarer. The third type of DAO, which frankly, I don't really truly want to classify as a DAO, are the DAOs that you see most often. And these are investment DAOs. These are great for, I guess, contributors and folks that kind of want to access private market investment deals, but can't. And sometimes they take the form of a Discord channel with a bank account, or sometimes they have more layers of structure. But I'd say these DAOs are great for the general public because it allows anyone kind of to get insight into how investing works. And I think that's awesome. But I think from an investment perspective, from a VC or just institutional grade investment perspective, these are very hard to invest in. And I could say the same for social DAOs. So there are these DAOs that just simply bring together like-minded folks who share an interest in, say, creating digital artwork or chatting about utopianism or creating interesting storylines that may get funded for a movie later on. These are cool. These definitely bring folks together from all around the world, and they generate funding to host events, and I think it's an awesome thing. But again, these are less investable, but just an awesome thing that now exists. And then this final type, public goods DAOs, probably one of the most interesting and unique type of DAOs, where they come together almost as a fundraising vehicle to take something private public. And the big meme about this category has been the Constitution DAO, where I think it was like 15 million people. I'm getting that number wrong, but there was a lot of people came together to raise $40 million to try buy one of the 11 copies of the Constitution. That's not a very, I guess, I'd say practical use of that money, but there are DAOs that are in this category that are truly making an impact through buying, say, pharmaceutical IP that's been locked up forever, or research IP that's again locked up forever, making that public. It almost contrasts private equity in the sense that this is public equity, and democratizing these would-be private assets, and making them open for additional value extraction, I guess. And I'd say these are, I guess, broadly the 5 types, but I'm sure there's more that will be produced out there. And I wouldn't say all DAOs currently fit nicely into any of these particular categories, but and there might be DAOs out there that actually are a hybrid of these. And I can think of one here, Molecule DAO, where they kind of buy research and pharmaceutical IP, and then they bring in pharmaceutical experts to try make these drugs cheaper and easier to access for everyone. Yeah, it's an emerging field, and I think this is a rough kind of breakdown of the different types. This is a little bit of a scary slide now that I look at it, but DAO inner workings. I guess we've talked about the different types of DAOs and why DAOs are coming to fruition and all that, but digging a little deeper, there are probably 7 pods of operations within a DAO. You've got marketing, biz dev, treasury, product, engineering people. And I think 6 of the 7 of these are what is typical for your normal corporation. It's just the community piece that is different. And currently there's been so much venture capital money that's been poured into creating better DAO tooling that probably isn't best for me to talk about that now, but this kind of gives you a broad overview of what you may expect if you are trying to start a DAO, the different pods that you may need to manage. These are some examples of DAOs and the inner workings. So just got 5 here, but I'll probably just talk to Bankless. Bankless, I have a case study coming up soon, but to kind of preempt that, they're a media DAO. They are a DAO of 7,000 members with a mission to educate folks on crypto and how to become bankless per se. And they have contributors from all over the world writing content and actually being rewarded and compensated for that content. And they've amassed a treasury of 3.8 mil, and they have a very successful podcast and very successful newsletter with over hundreds of thousands of subscribers, which I highly recommend actually checking out. We're not investors, so this is not a AirTree plug. But the way they kind of have structured themselves is a lot of DAOs use Discord as the kind of first coordination tool where they manage the different pods that we just saw here. And they use that to welcome new community members and just to keep on pulse of the community. A tool called Snapshot is often used then for anything that requires voting and decision making. And this tool basically just pulls in all the wallets, all the relevant wallets with a bankless DAO token in, and allows them to vote based on maybe participation or how many bankless DAO tokens they have. They funded the DAO through token sales, and this is actually an interesting piece I probably should spend a bit on. DAOs can get funding from different places, but I think the top three methods have been through a token sale, where you're kind of promising utility or access down the line, an NFT sale, which itself is also a token, or you have institutional grade investors come in, and maybe it's a combo of all those three things. There's also compensation tools that a bunch of these DAOs use, and I think Coordinape is probably the best that I've seen on market. And as you can see here across the spectrum, you can see that contributors can earn anywhere between 1 and 7K a month. It's quite material. And I think this is actually relatively held up despite the market cooling over the last couple of months. So this is a broad-based kind of a overview of the inner workings of some DAOs. Kind of just went through bankless there, but I'll talk through another case study here with Uniswap. So as I mentioned before, Uniswap has a fully diluted market valuation of 6.6 billion. They have essentially created a decentralized exchange, say in contrast to the ASX or Coinbase, which are centralized exchanges that charges the best, like the lowest fees on market, 0.3%, and has been running for the last 3-4 years, and have amassed over I think it was 350K members with that have pushed through 89 proposals, and they have just a constant upgrade stream of proposals going through. And it's awesome to see that that coordination at a global level of 350,000 people has resulted in this. It's frankly amazing, and this is without a lot of the DAO tooling infrastructure that's kind of only just coming to bear. I probably won't go too deep into just how this works, but at a broad base level, the fees that Uniswap takes as essentially a clip on any transaction between buyers and sellers goes back to, a portion of that goes back to the folks within the DAO, and then a portion of that actually goes to, or I think is moving to buying Uniswap off the open market to create buying pressure that's correlated with the usage of the actual platform. Okay. I realize I'm kind of getting close to time here, so I'm going to close this out. So just some closing thoughts. I think at the center of this DAO movement is really this notion of shared ownership. There was a big survey done by Gitcoin and Bankless DAO, and the overwhelming kind of sentiment that the DAO participants had was that they were feeling a sense of fulfillment, meaning, purpose, not found in traditional organizations because they had ownership and they had transparency. And again, they're also like at the bleeding edge of tech and culture. But I think the ownership piece is really the big draw card here. If you're thinking about starting a DAO, I think they are relatively easy to spin up at a very, very basic level. And you don't need the same level of legal articles and corporation expertise and approval to kind of spin them up. But it doesn't, it means that there are a bunch of legal caveats here. It means that there's a lot of gray area around how legal liability is placed on DAOs. And I would still say, if you are kind of looking to use a DAO model for your vision and mission, to seek some legal advice, and I'd plug Johnny Popovich here. She's probably one of the best blockchain legal lawyers in Australia, and she's starting a DAO for legal services centered around Web3. So great person to get in touch with if you're thinking about spinning up a DAO. And then lastly, like, there are still many challenges to overcome with DAOs. I don't think it's the perfect model at all, and I think we've seen a lot of challenges to the whole pure decentralization narrative and thesis. And there's a lot to do in terms of bettering compliance, coordination, resource allocation, retainment of talent, all while potentially balancing the volatility of the token base that's in reference to the rest of the crypto market. But all that said, I think with this blockchain empowering tokens, empowering a greater sense of ownership, I think we have a greater sense of connectivity through DAOs, and that makes for more resilient systems going forward and organizations going forward. And I think it's just awesome. Like, I think I've been part of DAOs where I've been chatting with folks from Brazil to South Korea, and we're just nerding out about things that we are interested in. And I think this level of connectivity hasn't ever been really surfaced before. So if you guys want to learn more about DAOs and crypto in general, I'd highly recommend the resources that, well, AirTree has some resource, but I think the leading kind of organizations that speak to and write on this topic are A16Z in the US, Bankless DAO, Alchemy. There's probably some great folks on Twitter also to follow, like Lee Jin from Variant Fund, Chris Dixon from Andreessen Horowitz, and the name escapes me, but two other funds that were great to follow also are Electric Capital and Paradigm. And if you're interested in, I guess, dabbling in DAOs, there's a great Australian DAO called DAO Under that you could check out, and I think they're all very friendly folk there, so worth just checking them out and kind of seeing the lay of the land and understanding what it feels like to be part of a DAO. But that's a wrap. Big thanks to Lana and Kate for having me on board, and I think we'll move into questions.
Okay, thanks so much, Kevin. That was amazing. I was just, it changes everything like the whole time. I'll just remove my spotlight and if you can undo your slides, please. Yep. And then maybe I'll keep you spotlighted, so then your face is there too. So just on a broader thing, is this like a socialist or a libertarian dream, or is this where they collide? Like, what are you seeing politically? Like, founders, do you have to kind of agree with this dogma, or because I'm just thinking, it's I see these kind of different pathways, people who like collaboration and people who like decentralization. So what are you seeing like in that founder psyche?
I think the best founders in this space are very fluid with their beliefs. They have strong opinions held weakly. I think when you become potentially dogmatic, you may close yourself to ideas and people. And so I'd say, like, see DAOs for what they are. But I'd say there's those crypto maxis out there that just solely believe in decentralization. And I think that could be one reality in 50 years time, but right now it's not. And it's not, I think it's a very hard to get to that. And we've seen the challenges with that through voting and hacks and control and restructuring. There's a lot there that decentralization doesn't necessarily solve. Hopefully that is a roundabout way of answering that question.
Yeah, I think it's a good way to put it as well, because as you mentioned, even at the start with what's happening in big tech or the downsides of big tech, and we're seeing this a lot with, expanding governments. So I think it's healthy, right, to have this movement that is decentralized, or that people are kind of reclaiming a bit of that power. So with AirTree or just VCs in general, are they even investing in DAOs? Like, would you even consider investing in DAOs? Is it like, how do you do that? Or how can you kind of take that to your LPs and say, are people fine with that now? Or what's kind of happening in that space?
So that was a long fight for me personally over the last year to get our LPs okay. Like with us investing in DAOs. Yes, we are investing in DAOs. And I think, AirTree is the first institutional grade VC in Australia to allow for that and kind of get our LPs comfortable with investing in DAOs. But there are a lot of legal gray areas around liability that we still have kind of questions around, and we've kind of isolated our investment in DAOs in a specific fund where it doesn't poison the rest of everything else that we have. And we are very intentional when it comes to how we invest in DAOs. We like to invest in infrastructure. We think a rising tide lifts all the boats, and infrastructure is really going to help move DAOs potentially to what they can be. When I broke down the DAOs by the 5 different categories, I'd say the first 2 categories are probably the most investable: products and services. And I'd argue I'd lean towards the first one more. And I think the themes that we're seeing now that we're interested in, we're still very interested in the thesis of open financial systems, where like the current financial system costs 20% of global GDP to operate. And some may argue that that is the cost of trust, but I think that's quite a high premium to pay to just move money around, right? So we still believe in that thesis. A thesis that we're building on now is the notion of digital identity and what that could unlock in terms of what a future labor force could be, and how that labor force and resource allocation processes there could remove a lot of the biases that we currently have now around hiring. So that's another thing that we're kind of playing into, and trying to understand potentially where there are infrastructure plays that are allowing folks to say capture all the contribution that they made on chain, or maybe even off chain, and so that they are better positioned to receive certain tasks from DAOs, or maybe even better positioned to receive lower interest rates from a DeFi project. So that's a really interesting kind of field for us right now. Yeah, it's those 2 main ones for now that I'm looking at, and there's this notion of value continuity that I think we're exploring in the field of GameFi, in where there may be infrastructure that allows folks to essentially, given all the time and engagement and money maybe they've put into a certain game, they may get rewarded for that should they buy the following game from the same gaming studio. We don't think that currently exists yet, and it maybe exists in like a membership-based model, but yeah, those are kind of the three different like thesis strands that we're exploring, and we're constantly asking ourselves like, why couldn't Web 2 do this better? So there's always that interrogation that goes into any of these investment committee.
Yeah.
Yeah.
Amazing. And are you meeting founders like from the DAO? Like, is there kind of a leader like who you would meet with, or are you kind of evaluating everyone in the DAO? Like, how do you? It's not really like a traditional founder investment due diligence process, right?
Yeah. We are. A lot of DAOs start off as a founding group, and then they may say that a DAO is on the roadmap. They might not start out immediately as a DAO, but these founding teams tend to have actually quite large co-founding squads, everywhere from like 2 to 5 to 6, and we do try to talk to as many folks as possible whenever we're assessing an opportunity. I think the community, it as long as we're okay with how they're thinking about codifying the rules of the DAO and their ethics, we're largely okay with, then we get comfort essentially with investing. Should we get comfort in how they're thinking about structuring it? Of course, this may change over time, like should certain votes occur and we're not okay with it, but we haven't got up to that stage yet.
Okay, amazing. We've got 2 questions from the audience, and I've still got a couple of rapid fire ones at the end as well. So people keep listing them in here, and then we'll try and get through as many as possible. So Alicia asks, how do you ensure quality work from contributors in DAO structure?
Yeah, so quality work has been an interesting one. There's different pricing, there's different compensation models, and different resource allocation models that folks have used. Some DAOs do a bit more of a rigorous screening before they allow someone to take on a bounty. Say you're doing a design piece for a startup organization. They would kind of require you to submit your portfolio beforehand, and then assess the range of different options they have before they allow someone to take on that task, and take on that certain client. And maybe there's something around the compensation as well, where they structure it so that it's half of the compensation is given up front, and then the other half may be given at the back end should the quality meet the standard that that they were like informed and required to do.
It's funny, as kind of performance management in itself is a centralized thing, you know, with management hierarchy and codification of what's acceptable. So it's almost like we need to rethink even performance management and delivery of work and all of that in these structures as well, right?
But there is kind of infrastructure, going back to the digital identity point I was talking about, there is infrastructure that's being built that will allow you to essentially have a DAO passport that will assess everything that you've done on chain and off chain, give you somewhat of a credit score for that. And then through that, folks from DAOs who are actually allocating the bounty or the capital can better make a decision as to who is more likely to do better work.
That's great. That was missing from Web 2, you know, when you had your ratings and reviews, but you couldn't port them across platforms. So you'd have to start again across each marketplace. So I think that's awesome. David asks, how do DAOs handle ambiguity in decision-making token issues? I know you skipped through the dispute management process, but are there common overarching principles?
They're common. I think there's a bunch of emerging practices here. I think one of the issues that DAOs have had is firing people's hard, and some of the ways that they bypass that is they just create another layer of bounties and they don't select that person that they don't want to take that bounty or that task. Ambiguity in decision making occurs all the time, and I think particularly in venture, but with DAOs, there is an extent to which you rely on the wisdom of the crowd and vote on the issue, and there is an extent to which you may want to gate off that, fence off the people who are able to vote based on their qualifications and their domain expertise. But the dispute management piece is still largely in the works. I think that's we've seen a lot of kind of crypto projects have co-founder issues, and I don't think that's been properly solved yet. I think it's more a human issue than a blockchain Web3 piece. Yeah.
Okay, amazing. And now, Vikas, how do you go about attributing value, compensation to the contributions people make?
So there are platforms that are benchmarking tasks by compensation. So I think Coordinate is one, and then there's a bunch of others out there that are essentially compensation tools, and because they aggregate, because they see essentially how compensation's working across the board for different tasks, they're able to aggregate all that data and show you, oh, what is the right dollar value to assign to X bounty. Maybe it's generating a partnership or generating a piece of design work. I think there's also like Web2 compensation contractor benchmarks out there that you could probably find across some of the larger consulting aggregators like a TopTool or a Fiverr or Upwork, Upstack, that you could use. I just saw Vic's response here. I don't have any right now that I can suggest, but I'll get back to you on that one.
And I've noticed, because it is decentralized and a lot of people are starting so many communities and you're right, DAOs, are you seeing it's almost hard to get into or understand because there's so many little fringe communities and events. And even today I've saved like 20 tabs, right, of things that you've spoken about, and all the websites, they all look very similar, like because everything's always like black web design and all this kind of stuff. So
it's either black or like gradient.
Is it something that if we just wait 6 months, like a lot of the kind of noise will just die out, and then you kind of can really benefit from just a bit more focus in the market? Because I see like people either get it or they don't. Even registering for today, I think it's very trendy at the moment, but I think that it's just really hard for people who don't maybe understand it to get into it, because there's just so many places and things to learn. Like you could be seeing a new DAO or Discord community or whatever every day, right? Yeah. So what would you recommend for someone to just even find out more, or where to focus, or, get involved if there's only, they had a limited amount of time to do so?
Yeah, absolutely. And I agree. I think that's a broader comment as well on the rest of crypto. It's
accessibility.
So much noise.
Yeah.
And accessibility, right? Like there's stuff everywhere across Twitter and all these newsletters. I think Bankless is great. I know I've talked about them a lot. Trust me, I'm not trying to plug them from a venture perspective, but they actually personally help me better understand crypto and how to first get it onto a wallet, how to sign on, how to then access this NFT trading platform, this DAO, or that DeFi protocol. Bankless has great guides as to the practical kind of like, if you want to get into this space, how do you level up? So I'd highly recommend that resource. And then I'd say from there, Deep DAO is a great aggregator of just DAO statistics. And you can kind of see through Deep DAO which are the largest DAOs, which are the most active DAOs, where participation is occurring, what's up and coming. And it's almost like a DAO directory. And I'd say those two resources, Bankless and Deep DAO, are probably like my first go-to. And I'd say like Discord can be very, very, very noisy when you open it and you're joining multiple different places, but I'd recommend just sticking to one or two to start off with. And then unfortunately, there's a lot of investment DAOs that aren't exactly the most ethical organizations out there. And there's a lot of noise because of them. So I'd recommend, if you're on Discord, make yourself private and make yourself hard to actually get DMs. So like, I think there's a lot of folks that just do direct marketing through Discord and even Telegram. So that's another way to kind of lower the noise. And
it's like on Twitter or Instagram, if I even talk about NFTs, I get 20 spam messages like instantly.
Yeah, it's very, very noisy. It's unfortunate. There's a lot of sensationalism that's occurring, but trust me, there's a lot of people building for the right reasons in this space.
Yeah.
So.
Amazing. And a final question, if there's no audience ones, are you seeing like diversity in all forms when it comes to DAOs, like globally, culturally, different sectors? You're saying, women, things like that. Is it not just kind of one subset of people living here that are focused on this and all this kind of stuff?
Yeah, absolutely. Diversity, like it is relatively hard to track because a lot of people are pseudonymous or anonymous online. But I'd say just anecdotally and based on the conversations I've had on Discord, DAOs are quite empowering for a lot of folks that like folks from developing worlds can get a proper Western world outcome. Like right, folks, mothers who have just had kids can jump on DAOs and do bounties and maintain an income. It's not a reliable income stream, but I'd say it's a step up from the gig economy type of income streams that we Web 2. So yeah, like diversity is, I think in Australia, we are very insulated and relatively privileged based on the legal and financial system that we have here. And we don't really feel the effects of currency as much as, say, someone from Iran or other places. And so crypto may not feel as impactful, but like, trust me, I've talked to folks overseas that we have to actually track FX every day because of the export.
Well, it's a lot of innovation, right? Even like mobile, all these kind of, mobile payments, it's not coming out of secure, super stable economies. It happens where it's out of necessity.
Yeah, exactly.
Amazing. There is a long question from David. So I wondered if, David, potentially we could answer that offline, if that's okay, because it is 2:00 now. I'll pass back to Lana. We'll just do a quick close, but that was amazing. I learned so much. Thank you so much for just sharing your wisdom and time and resources. Like, really, really appreciate it. So please join me in thanking Kevin in the chat, and I'll pass over to Lana to do a formal close as well. So cheers, everyone. Thanks.
Yes, amazing session. Kevin, thank you so much for your time, for your wisdom. That was really amazing. And all of the resources as well. We definitely will be looking into things a bit more after that as well. Just to let you know, Atto members will definitely get a recording of the event today. And I just have a few notices about Atto. We are open currently for applications for the Atto Accelerator, and it's a brand new program focused on building your product. So if you know any female founders who have an MVP live, a beta program live, or a tech product live, please recommend them to this program. It's 12 weeks. There's masterclasses, coaching, and all of the community support that you need to build and scale your startup. And we're focused on product market fit for this one, which is really exciting. So it's very product focused. If you know of any female founders who are interested in Atto, maybe the monthly membership or the accelerator program, please recommend that they submit an EOI. And our next event is our female founder office hours session with Gemma Lloyd from Work 180, which is a really popular series where we deep dive into their journey and ask all the hard questions about what it's actually like building a startup for a female founder. So you can register via a Brentbyte for that one as well. Any questions you have, you can contact us at hello@atto.vc, and you can check out all of the things that we do at atto.vc as well. And we're very accessible via social media as well. If you have any questions for us, feel free to send us a DM or tag us, and we will try and answer those there. again, thank you so much, Kevin, for this awesome session. It definitely learned a lot, and it's a new way of thinking about doing business, and I'm really excited for the future based on all of the things that you shared. So again, thank you everybody for joining us as well, and we will follow up the post session as well with everybody who registered. Thanks so much for joining us, and we'll hopefully see you soon.